When you see a dominant, undisputed champion suddenly start taking hits, it's jarring. Like watching a heavyweight boxer who just forgot how to throw a punch. I mean, Nike stock has actually hit a 12-year low.
Yeah, it's a staggering drop. And naturally, the entire market is asking, like, the exact same question right now.
Right. Is it finally time for you to buy the dip? Today, we are taking a deep dive into an April 2026 UBS research report. We're going to clearly explain the logic of this document. The analysts actually justify their neutral rating by building a logical case around three critical questions that will really determine Nike's financial recovery. Okay, let's unpack this.
Well, the document's first logical pillar really looks at Nike's product mix. Historically, they insisted that sportswear, which is essentially their fashion line, should never cross 30% of their total sales.
Right, because they had to protect their performance integrity.
Exactly. But today, sportswear is over 50% of their mix.
Wait, really? Over 50%? But, isn't athleisure where all the money is? If you're a business, why is crossing that 30% threshold actually a bad thing?
What's fascinating here is the core thesis of the report. Nike basically chased short-term athleisure growth at the direct expense of its sports authenticity.
Oh, wow.
Yeah, they forgot that their hardcore performance cred is exactly what makes their fashion gear cool to you in the first place.
It's like a hardcore pro athlete who just stops training to become a full-time fashion influencer. Sure, the Instagram spike for a year or two, but once people realize you can't actually play the game anymore, well, the fashion brands drop you too.
That is a great analogy. Your athletic credibility was the only reason you were cool. And because Nike diluted its sports focus, the document logically transitions to its next argument. Nike is losing its superpower of being a premium brand for everyone.
Here's where it gets really interesting. Because, I'm seeing a lot more Nike boxes at places like Kohl's and DSW lately.
Yeah.
And if Nike is increasingly selling in lower-end channels like that, aren't they just, training you to expect cheap sneakers?
Yes, absolutely. And by stepping back from those premium high-end channels, they've left the door wide open for competitors. Brands like On and Hoka have gladly stepped up to carve out incredibly strong niches right where Nike used to dominate.
Oh, for sure. On and Hoka are everywhere now.
Right. And it's also about cultural dominance. Nike's historical hype engine has always been basketball, but right now the sport is generating fewer culturally dominant stars.
So, without those icons constantly reminding people that Nike's the absolute peak of performance, it becomes almost impossible to justify those premium price tags.
Exactly. Which means a weakened brand identity leads directly to the document's final logical pillar. And that is the harsh math of returning to a 10% EBIT margin.
The bottom line, investors want that core operating profit back to where they expect it to be. But the report highlights a really surprising fact here. Portland, Oregon is now a global athletic hub.
Yeah, because competitors like On and Hoka set up shop right in Nike's backyard.
Right, meaning employee switching costs are lower. Nike employees can literally just walk across the street to get a new job. So Nike has to pay much more to retain top talent.
If we connect this to the bigger picture, you see the contradiction they are trapped in. Reviving the brand requires massive, aggressive investments in marketing and talent.
So they have to spend a fortune, right now.
Yeah, exactly. Because of that reality, there are absolutely no easy, cost-cutting drivers left to pull that will miraculously boost their operating profit quickly.
Man, it's a brutal domino effect.
Yeah.
The document's logic tracks a really clear path. An identity crisis caused brand dilution, which makes financial recovery incredibly expensive. So what does this all mean?
It's the ultimate turnaround question for them.
Right. It leaves you wondering, if a brand built entirely on athletic greatness loses its grip on sports, can it ever truly reclaim its crown just by cutting costs?
Definitely not an easy fix.
No, it's not.
Sure.
Well, we love tracking these massive shifts, and you won't want to miss what's next. Make sure to subscribe to this channel because the analysis in our next deep dive is going to be even more exciting. Catch you then.